Okay, I'm recording it. So I've gotten one pair AUD USD and which other pair? Okay, everyone can hear me. Thank you very much. Oh, just one person, AUD USD. While we wait for Mr. Owago, let's see what AUD USD have for us. And we're going to use the new strategy. It's not actually new, it's just well improved, that's all. And it's actually working pretty well. Euro USD, all right. Well, you see how this thing came to test here, and let me see what's happening here. Okay, there was an old chart. It went against us. All right, so this is AUD USD. We're going to draw this on our rectangle on 4 hours, and we're going to enter on 15 minutes. We'll identify where the market is going to go. And you know, the first step for you to start drawing your rectangle is to identify your impulse move. Now, let me use my pencil to identify my impulse move. 1 minute. So we've gotten an impulse move here all the way to this place. So you can see this place is a high, the highest high here, and here is what? The lowest low. I'm sure everyone can see it. Let me move this. Let me move it here. Okay, now, so this is the low, and this is the high. And this is our impulse move. So let me delete this, and you pick. Hi, baby, I'm on a call. Sorry.
Let me do my TV. I don't know where.
I'm sorry, everyone. Hold on. Let me attend to this girl. I'm so sorry about that, okay? I never knew my door was not locked. All right, so I'll pick my trend line and draw from the low to the high. This is very simple, and you need discipline for you to take it. You know, this is it. I picked it from what? The low here up to this high. Remember, this is 4 hours. 4 hours, you zoom out till you actually zoom out to the maximum level. So which is what we did. And we got this impulse move from this low to this high. I picked my trend line and I drew my trend line from this low to this high. Then I'll draw my rectangle. You pick your rectangle, draw it from here, you pick it up to this level. I'm sure everyone can see what I'm doing. So I've identified my rectangle. Sorry, I want to just make it perfect. Okay, so I've done that. And you use your horizontal line to identify your support, which is this at the bottom of the rectangle. And you pick your horizontal line, identify your resistance, which is the ceiling. You can as well call it the ceiling. Just like if you're in your house now, if you look up, you'll see your ceiling. And if you look down, you see your floor. So that floor, like I explained earlier to the beginners, your ceiling is your resistance level. The floor, it's your what? Support level. So for instance, you want to renovate your house and you want to, maybe you are living in a bungalow and you need to break the ceiling so you can create more floors above you. You know, each time you take your sledgehammer and you keep hitting on the ceiling, Very soon that ceiling gets weak. And when it's weak, what happens? It breaks. And by the time it breaks and you construct the next floor above it, that ceiling now becomes the new support, which is the new support, your ground floor. Then the ceiling above it will now become the new resistance. So that's how Forex is all about. This horizontal line here is the resistance, which is the ceiling. And this horizontal line here below here is the support, which is the floor. So I will also call it here the pivot level, or the pivot level, whatever English you want to call it, pivot levels. These levels identify as resistance and support levels. Price always reacts when they get to that place. Now you're going to ask yourself, why is price actually making this up and down lows while moving on a straight line? I will show you that there are other pivot levels in here within this rectangular box that is making price to respect it. So for you to understand how to go in the market and come out of the market, you need those pivot levels to show you your direction on what you're going to do. Now that we've identified our impulse move, we've drawn a rectangular box, and we've actually used our trend line to identify it. How can I identify this pivot level? The intersection between two trend lines. I'm going to pick another trend line, and I'll draw from the end, left end here, up to the ground floor, ground end here. Remember, this strategy was actually formed by Papa Smurf. He uses 4 hours for entry and exits, but I had to modify it on how I can actually use 4 hours. I can draw my rectangle on any time frame, 15 minutes, 1 hour, 4 hours, and you can actually use the same thing. The entry levels for his own is actually different. So I actually modified it in a way that your reward and ratio, your risk reward ratio is just top notch. So you won't have to risk too much and you gain very much, and your risk will be very low. So how do I get my pivot levels? The intersection between the two trend lines will give you a pivot level. Now, I've drawn my first trend line here and the second trend line here. The intersection is here. I'm going to place this horizontal line here. That makes it a pivot level. Now you will see what happened in the past. I want you to look left. How price reacted. Price broke this pivot level, retested it, and did what? And it came down. Price broke out of the pivot level. If I open this thing, you see that there's a little retest here and it went up. So all these reactions here, we're going to see why the price actually stopped here. There could be a pivot level here. There could be a pivot level here. So what are you going to do? This box has been divided into 2 equal parts. Here is the first part and here is the second part. So how can I identify more pivot level? I'll do the same thing I did for the big box, for the 2 little box that has been divided into 2. I'll pick my horizontal line here and draw from here to this place. Just the same way you did to the big box, you're going to do to the smaller box. From here to here. And do the same thing here. Mr. Joshua, if you're on the call for you to take the class, just send me, type on the chat box so I can make you host and you take it up from there, okay? So now you can see why I said there's actually a pivot level here. That was why price reacted to all these levels. Now, if I pick my horizontal line and place it in the intersection between these 2 places, you will ask yourself, oh, now I see the reason why price reacted, because there's a pivot or pivot levels there. You can see it. That was why price came here and reacted. It came down, broke it. You can see all the testing here. It keeps touching it, touching it, touching it before it went up. And there's actually another level here. Look at the intersection here. That was why price reacted before it went up. So now I'm going to do this. Put price here. And the beauty about this thing, if you draw this, it can help you determine what is going to happen in the future. That is the beauty about the rectangle and the pivot levels. With all the levels, you can just tell what's going to happen in the nearest future. So now this is what price is reacting to. You know, we're also using the moving average to identify the trend. But before that, let's finish drawing it. Let's identify all our pivot level. I'm just doing this introduction so we can actually wait for Joshua, and he will show us his winning strategy that has actually helped him and other of his students make money from the forex market and the crypto and as well the binary markets. 1 minute. You know, we're joking in the chat room, and we said in the WhatsApp on the WhatsApp group, and we said this is actually QOP rec strategy because we are drawing it on 4 hours, but our entry is on 15 minutes. And I'll show you how the entry is going to be. Now this intersection here, we'll put it there. I'll pick another horizontal line and do the same thing here. So beautiful. We've drawn it, and this is how it looks like. That's all. All you need to do is the reaction on each level. That's all. We don't need to do too much analysis that leads to paralysis. Now I'm using two, it's actually 3 moving averages, 50, 200, and 800. But let's use 2 for now, 50 and 200. Now, why do we say 50 and 200? The 200 moving average is a trend indicator. It tells you what is happening in the markets. Meaning, if price is above the 200, let me close the 50 so you won't be confused. This is the 200 moving average, a black one. If price is above the 200 moving average, it tells you that the trend is an uptrend based on this strategy. So looking at it, you tell that price is still moving up. If price is below your 200 moving average, it tells you, just like what you have on the left here, it tells you that price is what? Coming on a downward movement. So you should be looking more of sells, but if it's above, you should be looking more of what? Buys. Then what does the work of the 50 moving average is for crossing? If the 50 cross the 200 moving average above, it gives you more assurance that what? The market is going to go on an uptrend. That is just what we need the moving averages for. But your rectangle and the pivot levels will tell you your entry and your exit in the market. Now, this is the 4 hours. We're done with it. So we change it to the 15 minutes. Hold on. I hope this thing did not disappear. I'm going to cry. All right. Thank God it didn't disappear, because trust me, I was going to cry. Let me save this. Let me reset it. Okay. I'll go to the 15 minutes. Okay. Now you can see what's happening here. On the 15 minutes, that price is, it's just because, let me put it on 30 minutes, but I'll show you your entry on 15 minutes. Just, I will need to show you something here. How you enter and you exit the market using this strategy. Okay. So how you enter and exit this strategy, I need price to be on a pivot level so I can show you the entry and exit. Let me use the 15 minutes. I'll squeeze it away. Sorry, it's loading. You know, because it's loading, just hold on a bit. Let the price, all the price come up. Let me log in on my phone so I can see how it's appearing on the phone. 6. Okay, 1 minute. Few minutes. When my chat is blinking. Okay, Joshua is here, but let me finish this before we get started. Okay, so I won't take much of Joshua's time. Let me squeeze this. Yes, Joshua, I'm going to link you up. I need to just finish this particular stuff. I'm actually showing them. All right, beautiful. Now, how to enter this trade? I can't see the other. Okay, it's actually loading. Just give me 1 minute. I need everything to load so I can show you how to enter and exit before Mr. Joshua takes over, and I'll make him the host. Now, while it's loading, if you want to enter this trade, what you should look at first is the price. Let's say you want to take a buy on this particular pair, AUD USD. It should be on the pivot level. The candle that broke the pivot level, let me draw it. Let's assume it was going up and you see a candle that did something like this on 15 minutes. So this candle broke this pivot level, an indication that, okay, I want to keep buying, but you're not going to what? Enter the trade. You're going to wait for the next 15 minutes candle to form and close. If the next 15 minutes candle forms and close above your pivot level like this, as soon as it closes above your pivot level, you take a buy trade. That is how the entry is. You take a buy trade. And when you take a buy trade, what is your stop loss? Your stop loss will be below the candle that did what? Broke your pivot level. That is how you enter and exit using this strategy. But for the purpose of this class, what I see here based on this same strategy, price reacted on our ceiling on the 15 minutes. You can see that price reacted on our ceiling there, which shows you that, and there's a crossing. Remember I told you if 50 cross 20, it gives you an indication for what? A sell. Now you can see the crossing happened somewhere around here. So what I'm expecting is what? Price to drop a bit. But for me, I won't take this pair. You know why I'm going to take it? Because I've missed it from the top here, all the way from here. So you're in the middle of this pair, thinking it's going to come down here, which we don't know, because from our indication on the 4 hours, it's telling us that, see what's going to happen. Price is still what? On an uptrend. Price is still on an uptrend going upwards. So this little movement you see here could be just a retracement before it continues going up back to where it's coming from. But entry from the 15 minutes, because I already missed it from the top here, I won't want to chase the trade. So we're going to come back to this, and I will make Mr. Joshua a what? The host. And I'll start sharing my screen so he can tell us how and what he's doing to make money using his own strategy for boom and crash. All right. So Mr. Joshua, I'm going to make you the host now. If there's any question, you can type it on the chat box. I'm trying to look for you. Please, can you just click on the raise your hand so I can actually identify you faster. You can't hear me, Mr. Joshua, because you're not connected. Oh, I'm sorry about that. 1 minute. Let me tell him how to do it. Click on the mic sign and connect. Sorry, his mic is not connected. Oluwatobi Lolatu, your mic is not connected. So you guys need to, let me post it to the wall on the chat box.
Who I am in the forex market. I'm a student of Peace Eze. She is my mentor, and I'm very, very pleased to be here today to speak with you people concerning these things. So it's really a pleasure for me to be opportune to host this program right now. And I'm very, very happy to want to tell us about some few secrets that would enable us to have some profitable trades while carrying out trades on boom 1000 and crash 1000. So right now it's all about the few topics that we are going to encounter in subsequent Zoom calls. One of such topics is currency mobility. Currency mobility. You have to understand the mobility of a particular commodity, currency, or crypto assets before you try to enter that trade. Your point of entry is determined by the flow of the market price actions. If you want to go into a trade, let me say on boom 1000, you should first of all kind of know the trend. Is this trend bullish or is bearish? If it's bearish, that means you should be looking out for retracements. How far can the retracement go? How far down can it go? Because you are not going to be buying in a downtrend. Buying would lead you to a loss because the speed of the ticks movement will be very, very slow. And on the other hand, you will be involved in a lot of consolidations. So you would not want to set up your trades on a buy action when you are in a downtrend. It will be more advisable to avoid the pullbacks and take the retracements. So, but if you wanted to execute a buy action in a downtrend, it's still possible. But then, where is your stop loss going to be? Considering the speed of the price actions on that trend, that particular trend at that particular time. So if you put a buy action and you put a short SL, a conservative SL that you just manufactured by yourself and say, oh, based on your own discretion, okay, let me just put 5 pips, let me put 10 pips on this thing, or 10 ticks or 15 ticks. Whereas the speed of that particular commodity or derivative is going to run about 50 to 100 ticks in that direction, and you have just placed an SL of 25 ticks, which will not be enough to carry out that trade. So at the end of the day, you end up putting up a trade that would not be profitable at the end. You run at a loss, and you start to kind of find out what happened. Is this that the market makers are using a crystal ball to know where my SL is? But you did not consider the mobility of that currency or the crypto assets or the stock or the shares. You didn't consider the speeds, the way it will appear on the market structure, the market structure is a good view for you to use when you are trying to analyze trades on Boom 1000. You have to go to a higher time frame like H4 or H1. So when you do that, you will see that the trade would go in the rightful direction that is good and vital for you. So on this note, I would like us to pinpoint this analysis using H4 charts to know the trends. When you now know the trend, that could help you to understand the direction the market is headed, and it will help you to calculate the number of pips that will be necessary to prevent a stop loss position hit. So that is what I mean by mobility. Mobility, the supply. You have to know how many pips this trade can go against me. If you know that this trade can go against me by a very long amount of pips or ticks, why not you change the direction of the market? If your mind is telling you to buy and you're scared to put a small SL for your trade, maybe because you do not understand the market price actions that is going to happen, and you are trying to, let me say, okay, this trend is going to have a short flow supply to this side. Why not me wait for a retest of this position so that I could be able to allow the market to come to me? You allow the market to come to you so that you would take the necessary action by having a proper entry. All this boils down to understanding the flow of the trends, the mobility, the flow, the motion. It allows you to know the kind of pending order to use, the kind of pending order, the rightful pending order. Should I use a buy stop for this trade? Will this trade go ahead towards the bullish side? Will this trade go ahead further, or is it going to be a dead cat bounce? A dead cat bounce. What do I mean by that? What do I mean by a dead cat bounce? A trade that you are expecting it to go up and suddenly it starts coming down towards your entry and may even pass your entry. That's a dead cat bounce. So I believe this video is meant to help us to understand what is necessary, what is needed of us as I explain this thing to us this evening. I take my time, though I'm not so consistent like that, but I believe we all are going to understand this class from these few words I have talked about right now. I believe we would begin to get the message, the impact of this message. Like what I've talked about right now, I'm talking about doing something that would enable us to understand the flow of the chart. Don't mind me, I want to sit down somewhere that will be comfortable for me. Okay, you can hear me very well and see me too, is it not? Okay, very nice. So the flow of the charts, the mobility of the charts depends more on how you as a trader understand the market price action. So because you trade Boom 1000 doesn't just mean that once you just see a movement to a particular direction, you want to cash in on it, and you didn't do a proper analysis to ascertain whether this trend that I'm seeing is the real trend. or whether it's a trend that will not go according to the way I want it to go. So a very good understanding of this would help you to know what you have to do. Okay? Yeah. Would help you to understand what you have to do. And what you have to do is to know the exact number of pips that is needed to set your SL, the exact number of pips that you want to take for your risk. Is it a ratio of 2:1? The number of pips, you're seeing a strong resistance point in front. And you know that this trend may not be able to break it. So when you want to set your TP, your TP has to be within the range of that resistance, so that you don't have a trade where you put the trade hoping that it will do a 40 pips for you in that direction, and at the end of the day it cannot do 40 pips. It does just 30 pips and starts coming back to your entry to break even. So it's very vital to understand the mobility of the particular instrument that you are trading. This will now inform a proper risk management. So if you want to put a very big SL, so that it can, let's take for instance, you want to trade with 0.2 now, you can take even 100 pips. 100 pips will just be, if the trade should go 100 pips against you, it will be $20.
Sorry, Joshua, I think you need to round up because this is a 1 hour class, so I can do some analysis that we're going to take for this week, okay?
Okay.
Thank you.
So, all right, so thank you people very much for listening to this video call. And I promise next time when I would want to teach, I'll assemble my board and my projector so that I'll be able to show you people some secrets that I still have to share. So thank you so much, my mentor, for the opportunity for me to present this program. I'm very, very grateful.
Thank you, Joshua. We truly appreciate. Okay. So please type 77 on the chat box to appreciate Joshua for what he did. 777. All right, thank you. There are so many 77s on the chat box. So because this is a 1 hour class, we need to do some analysis to know what we're going to take this week. All right?
Yeah. Okay. Tomorrow in the morning, I would like to call a trade for you people on Boom 1000. I will call a trade for you people on Boom 1000.
All right, we truly appreciate it. You can post it on the WhatsApp group for people to actually take it.
Okay. All right.
All right. Thank you.
All right.
Okay, that was a wonderful session with Mr. Joshua. So I'm going to share back my screen and we'll continue with the analysis that we stopped last time. So if you can see my screen, can you type 3 on the chat box? Three on the chat box. All right, thank you, everyone. Thank you. Now, while Mr. Joshua was actually talking and I was looking at the chart to see how we can navigate it for this week. Now, this is AUD USD. I can't view this rectangle we drew on 4 hours because you know this is 4 hours. By the time you go to the smaller time frame, you won't be able to see it. So what I did is I went to 15 minutes. I knew that, okay, price came here, reacted, dropped, came back to this place, if you can take a look at this place here. Let me use my pencil. One minute. My chat is blinking. Let me see. Okay, good. Thank you. I'll use my pencil to draw. You can see this place, the price reacted here because there's a mini resistance there, here. So when I saw this, I went to 15 minutes. Even though I can't see it, I know that yes, price actually reacted on the ceiling over there. And you can see the consolidation that happened here and the breakout. So if I want to take this trade, I'll be expecting price to come back and retest this zone. And when it retests this zone, I will expect a drop. So my stop loss is above the zone because we've missed the first move, which is in the ceiling area. Let me squeeze this. You can see the ceiling area here, which is a green line, the one we drew on 4 hours. Price has already done what? Touched it, reacted, and came down. So what we're doing, we're chasing the trade. So now we're chasing it. We just have to add more analysis for us to know, is price going to come down or will it continue going back up? Let me reset this chart. Draw it. So what we're doing is we're going to wait for price to come and retest here, which is the zone where it broke out from. And when there's a retest, we expect a drop. So I'm expecting maybe if price, if market open, there could be a jump because this is about 40 something pips to this level. From here to here is about, that's done over 40 pips. You can see that. Then it dropped. So I'll comfortably sell this if price comes to retest this consolidation zone and rejected, then I'll sell it to the top, to the next pivot level. Sorry, and the next pivot level is around and that's the next pivot level. Sorry, about 73, which is very, very far. But I won't, this ADS, the pips count is actually big. And you can see what's happening here. This where I circled, remember where I circled? You can see there's so many reaction there. So many reaction. And price closed below the 200 moving average. That was on Friday. You can see that price closed below the moving 200 moving average. So there's either a tendency that this triple top you're seeing here could continue going down, or price will keep going back up. So for us to be sure that we're doing the right thing, we went to 15 minutes, we saw the consolidation, we boxed it up, expecting price to do what? Come back to retest where it broke out from. You can see this bearish candle here on H4. This bearish candle is an indication that what? There's a strong reaction that happened here. So I can only enter this trade when there's a retest back on this zone and it's been rejected, then I can comfortably sell. So if you want to sell this trade, you put your pending order here. That is around, let me use a cross. 77520. So let me write it down. Sell limit 0.77520. Stop loss 0.77 800. That's about 32 pips. Then TP, you can determine how much TP you want to do. 50, 100, 50, 200 pips. You can determine that yourself. But you wait for this to happen. We can as well make it. Okay, we can do this one. So this is what I'm looking at. But if that doesn't happen, if there's no retest, we'll see what will happen after the market opens. But you can see this M here. There's a rejection here, weak rejection here. There's a weak rejection here. Another weak. No, don't look at this. This is a circle I drew. Let me delete it so you won't be confused. This is how price is. There's a rejection here, there's a rejection here. Look at the weak reaction there, and it's showing like a triple top, 1, 2, 3. So if this sell is going to happen, I will expect price to come back and retest this zone on the 15 minutes, which we saw, then the drop will happen. And by the time the drops start happening, you'll see that the 50 will cross the 200. So let's go back to 15 minutes. You can see why I decided to do that. I will expect price to come back and retest this zone before I take my sell comfortably. So we are adding break and retest to this rectangle strategy. If you understand what I did, please can you type 7 on the chat box? If you have any question, type 7 before we go to the next. Someone said Euro USD. Before we go to the next. If you have any question, can you type it? If you understand it, type, okay, we've used 7. Type 6 on the chat box. This for you, let me do for Euro USD. Okay, so let's do Euro USD. Just one person understand it, which is Amy. You type 6. Hold on, there's some background noise I need to. I'm so sorry about the background noise. Kids are watching cartoon and they're making a whole lot of noise. Okay, so this is Euro USD. If I'm looking at it, you see that's already dropping. I hope we've not even missed it. So we're expecting some drop to Euro AUD USD just so that we're analyze. All right, thank you. What do we have here? Wow. Look at the buy opportunity. Remember this chart for those who was on this call. I say buy opportunity and Euro is the wait for this. This was somewhere around here. Let me go back to 15 minutes. I think I drew that 15 minutes. And look at how beautiful this thing. Market has opened. I saw it jump now on Euro USD. So we'll go back to AUD USD to see the reaction. We saw this thing the last time we had a class. Price was here. I said we can only sell one market open and close below 7,500. And look at this. Look at what happened. Price actually closed below it. We sold to this, and now see the buy. Wait for candles to close above 5,250, which it actually did. It closed above it because price was at 17,362 and did all this thing. So if you're in that class and you take a buy, how many pips counted that? That's about how many? 400 pips. And you're risking few pips, maybe about 20 or 30 pips to get 400 pips. That is a whole lot. That's the beauty about the rectangle strategy. It helps you to minimize your losses. So now let's delete this. I saw that the market's open. I'm seeing a gap. You can see the gap here. So let's go to AUD USD first and see what happened. Wow, see the beautiful gap. Can you see it? How many of you can see the gap? You can see the beautiful gap. So I'm expecting price to go up a bit and react. Then you do what? You take a sell because this gap must definitely close. This is 15 minutes. So this our sell limit is actually what? Valid. So let's wait for price to react. It can come up to, it can turn back here at the 50 moving average, or it can decide to go up a bit. But we need to monitor it and see the next candle reaction. Then we'll take our sell on AUD USD. So Euro USD, let's see what happened. Go to 4 hours, zoom out. We've identified our trend here up to this place. But I'm not going to pick that one. Let me show you why. The reason why I'm not going to pick that trend. See this reaction here. Sorry for the, let me delete this. Let me draw it properly. See this? So I can as well just pick from here up to this place. Let me pick this one, or I can even still pick this one here. Instead of picking the whole lot, because by the time I pick this whole lot, when I get to the 15 minutes, I won't be able to see it. So the smaller I pick the impulse move on 4 hours, I'll be able to view it on 15 minutes. So it can determine and tell us what to take. So let me pick this from this place to this place. So I'll delete this, take my trend line and draw from this low to this high. So analyzing 3 pairs today, AUD USD, Euro USD, and gold. Remember, it must not be perfect, but just get the low and get the high. That is just it. When you get it, you're good to go. Look for the next low and the next high. That is just how to identify your support and resistance. Have you seen can you see the beauty of rectangle? You see how price came to this pivot level and it reacted. Can you see that? It reacted to it. So it's one of the best thing that has actually happened to me. One of the best strategy that Papa Smurf brought. So you can modify it to the way that suits you and it benefits you. Yeah, I'm going to show you the 50, 200, and okay, I'll show you the 800 moving average. Just if you are taking on a longer trend and you want to, you're an intraday trader or position trader, you can use that one as your TP, whether you're buying or you're selling. But I'll show you that. Don't worry. I'll show you with this Euro USD. The 800 is just for your TP. So I won't draw the other box to get my pivot because we're dealing with this particular one here. So we'll just use this. I will go to the 15 minutes and analyze what's going to happen. So you won't have to wait so much time. Go to 15 minutes. I will see how price. Okay, this is perfect. You can see why I explained that it was needed that we actually had to lower our impulse move on the 4 hours time frame so we can see the reaction on the 15 minutes. If you want, I can even do a recap on AUD/USD on another chart, lowering the impulse move, looking for the next low and the next high. And we can use that to identify the movement of the market. Now, for the entry of this is beautiful. If you are actually using this strategy, you should have been on this trade. If you actually took it last Friday before the market closed. Now, the entry of this strategy is you wait for a candle to break your pivot level, which is this pivot level that we've seen here now. Now, this candle broke it. Then instead of you entering the market, you have to wait for confirmation. And the confirmation is for another 15 minutes candle to close below your pivot level, which is this candle here. And this candle actually closed below it. Then you take your instant execution sell. So if you are taking this trade on Friday, price would be on your entry level now because it's closed here and you take a sell and price is almost there. So this market is actually good for sell. Your TP should be here, this particular place. So, and your stop loss would be the candle that broke it, which is this candle here. So what I'm going to do, I'll take my long position, my short position candle and place it here, which is where market's closed. And your TP, your stop loss should be above here. And your TP here. So I won't advise you to take this trade now because the spread in the market is actually very high. So you can wait for like 1 hour or 2 hours. Then you can take your instant execution sell. This is one is perfect for you to sell. So you sell this guy down to this place. The stop loss should be above the candle that broke it. So our stop loss is, let me type it for benefit of this class. Oh. Sell Euro USD stop loss 1.20795 TP 1.19. You can do 500 random number. Okay, so this is how this goes. So how much are we losing? 43 pips, and we're gaining 150 pips, which is fair enough. If I'm not mistaken, right? Hold on. For less than that, price should do, if you're entering somewhere around here, yeah, about 43 pips. Yeah, exactly. 43 pips and we're gaining 88 pips. So it's 1:2, which is okay. So this is it for your TP1. If you still want to go further, you have to wait for price to break below this pivot level, this particular one, close below it, then you can move your stop. You can take P2 to the next level, which is 1.17474. For now, this is what we have for Euro USD. So expecting price to go up a bit. Price can even come to test here. So let me move this to this particular place here. So let's change our entry. Our stop loss will still be the same. So your entry should be on the pivot level, let's say 2,400. So you allow price to make 1.20400. Price to come back to retest this pivot level, close below it, then you take your sell. So you're losing 31 pips and you're gaining how much? Losing 31 pips to get, okay, which is fair enough. The ratio is 2.8. So your risk to reward is actually good. So now this is actually better. So this is sell opportunity for Euro USD. The entry should be here, somewhere around here, back on this pivot level, and come back. So let's go back to AUD USD and see what's happening. Price is still going up. You can see. Is it coming back up to test this? But why we do that? I need to do something. Let me redraw this guy on the lower. Let me delete everything. Go back to 4 hours and look for shorter impulse move. Okay, I think that's the same one. So instead of me picking from this low to this high, I'm going to pick from this low, particular low here, to this high. So to enable me to see it on 15 minutes. I think that is better. So let me pick it from this low here to this high. And I'll draw it again. I will see how price reacts to this on 15 minutes. You know, 15 minutes is where all the move happens. All the move happen on 15 minutes. So the longer time frame is just for you to help know the trend of the market. The lower time frame helps you with entry. You have a good entry and a good reward risk to reward ratio. Because if you try to enter on 4 hours and you have a small account, you won't like the outcome. Because one bearish or bullish candle could be a lot of pips on a higher time frame. And if you place your candle below or above it, it could wipe your account if it goes against you. So the smaller the time frame for your account size, the better you enter through the smaller time frame. It helps it a whole lot easier. I'm sure everyone is following. If you are still getting what I'm saying, please react on the chat box so I can know that yes, I'm not just talking to myself and the people I'm actually talking to understand what's going on. I remember you can use this thing on volatility. You can also use it, using it to analyze the price of Bitcoin. That's cryptocurrencies. Oil on anything. All right. Damilola, thank you. All right, good. Thank you. Everyone is following. I just wanted to know that I'm on the same page. Okay, thank you, everyone. I met a young man yesterday. He came for my event on Saturday in Ikeja. And he said, since he started using the trading journal, his trading life has never been the same. It has been very good and awesome. The trading journal will help you have good accountability of what you're doing. Until you take your Forex life as a business, you understand that when you meet your target for the day, you close shop. People that open bank, they open by 8 o'clock and they close by 5 o'clock. They have a reason for doing that. So you that as a Forex trader, you should have a closing time. Now you can see how I did this here. Let me reset it. You see how price reacted? You can see no matter, just get an impulse move. You'll see how price is going to react by the time you draw your pivot level. Look at this. See this pivot level here. See how price reacted to it. So let me go to 15 minutes and see what we're going to do. You can see that we still have the same reaction. Now, for instance, you took this trade on Friday. Remember, this is the candle that broke the pivot level. This green one did not do what? Close below the pivot level, so you wait. This particular one closed below the pivot level. You will wait for the next one to close. This is where the next one closed, and it closed exactly at this place where market came back to do what? To jump and test it. Now, if you want to enter this trade, you are valid to enter it because it's still giving us a sell indication. But now let's use our moving averages to see what happened. 200 is still indicates that is a what? Is a sell because price is below the 200 moving average. Now let's see what 50 is telling us. 50 crossed somewhere around here after the consolidation. It broke it and we're waiting for what? Remember I told you we're going to wait around the pivot level before we do what? Take our sell. But if you cannot wait because you can see price is reacting to it, it's just that your risk will be higher than the person that is going to wait for price to come back and retest on this level. But you can use a smaller entry, 0.01, and enter it. Then when price reacts, go back up here, you do what? You enter your trade again. So for this particular trade, this is how your short position should look like. That would be your stop loss. This will be your take profit. And your entry will be here. Let me just move the entry a bit here. Okay. So this is what this looks like. You wait for price to go up. You know, after this price broke here, it's now coming down. So if we take a sell on this trade, we are still valid because it's telling us that it's going to sell. But what I'm saying that you should wait a bit. Market just opened, so the spread will be very high. So wait for like 1 hour. By the time the spread has come back to normal, you can take your sell. So we have a sell on AUD USD. We have a sell on AUD USD and Euro USD as well. Let's see the reaction on AUD USD. Okay, we're still on AUD USD. Okay, beautiful. So this is what we have. We have a sell reaction, and Euro USD. We also have a sell on Euro USD. So I did not move this. Let's see what happens here. On 200 is still below. 50 has crossed, which is more indication for the sell. But I would prefer you wait and let's see how price comes back to retest this. Then let's see the 800. You know, 800 is a TP. But remember, this is an uptrend on the normal 4 hours time frame and higher time frame. That's why the 800 is above. So it still indicates that, oh, this is actually an uptrend. What you are doing is you are just selling the retracement. That's why I'm using the smaller time frame. So we can't use this to determine our TP. No, we can't use this to determine our TP here. Only way you can use the 800 to determine your TP if the 800 is below. Let's see on AUD USD for that kind of situation. It's still the same thing here, still up. telling us that market is going to sell. So we're going to use our stop loss, our take profit to be on the pivot level. But for instance, let me go to the higher time frame and see what's going to happen here. I want to see where the 800 is here. Okay, now for those who are position traders, their TP will be here at the tip of this 800. They just take the sell and allow their TP to come here for those who are position traders. That's what I'm saying. But because we're intraday traders, we're doing it on a daily basis, we're taking money and going out. You take your entry on 15 minutes and do what? Take your sell on every pivot levels. So for the person that asked, Francis, I'm sure you understand what the 800 level is indicating. It just tells you where your TP will be if you want to buy or you want to sell. So we have a sell on AUD USD, we have a sell on Euro USD. So let's see what gold has for us. Francis, if you understand what the 800 I did with 800, let me know. All right. You can chat on the chat box. Now let's see what gold has for us. It's taking so much time. This is the 1 hour class, but let's do the final one. All right, thank you, Francis. You're welcome. Gold. Gold has always been bullish. Always been bullish. But let's do this. Go to our 4 hours. Minimize. Let me say this. You can see the double bottom here. Beautiful double bottom. So now what impulse move am I going to use? This is an impulse move here. This is the highest high here, and this is the lowest low here. So what I'll do is pick my trend line, draw from here. Instead of using this one, I will use this one. So I can see it on my 15 minutes. So I'll draw this. And this. Identify the floor, which is the support, and your resistance. You can use different colors to do that. You can use red as a resistance. You can use green as your support, whichever way you want it. But just know that the horizontal lines are your pivot levels. So that's how you identify your horizontal lines. Oh, my chat box is blinking. Sorry, let me check who's chatting. Oh, how to apply? You mean how to put this indicator? Okay, you just come here on your trading view. You can see it here. Indicator. Moving averages. You can just search for moving averages. I already started. So if I start, you can see it. But what I'm using is exponential. So you click on moving average exponential. When it comes out, okay, you know what? Let me delete this so I can show you all from the beginning. Let me delete that. Close it. All right, Francis, if you want to add your moving averages to your chart, you come here to this F and X. It's written indicators and strategies. Click on it. And I already start my moving average exponential. So if you want to search for it, you just come here and you type moving average. When it comes out, all these things will come out, different kind of moving averages. But what I use is moving average exponential. So when you click on it, the first one comes out. I'm using 3. You click on it again, the second one will come out. Look at my chart on the left, but you can see it. And you click it again, and the third one. Because I'm using the free version of TradingView, I can use only 3 moving averages. But if you are using a paid rate TradingView, you can use it any kind of moving average you want to use. Now, if you look on my chart, let me reset it. You can see the moving averages there. Blue, green, they're all 9. That's why everything is there. So I'm going to come here on this place. Here is to hide and unhide it. If I click on hide, you see the green one showed. If I hide it, the yellow one is showing. If I hide it, everything is off. But if I click on it, I'm going to show it. Now, this sign here is the settings for you to change the settings of the moving average. So if you click on it, you change it from 9 to 50. The colors are different, so there's no point for you to change the color anymore. You can make it thicker if you want to. You click on it. This for the color. If you want to make it thicker, it's on a line chart. If you want to make it thicker, you come here and you change it to the thickness of it, or you put it this way, anyhow you want it. And you click on OK. So the 50 is now the blue. I will change this. Let me change this to black. I love making the 200 moving average black. So I come to input and I change the 9 to 200. And I do the same thing. Let me change the thickness. Let me change the thickness to this. And I click on OK. Then the 800, you come back here, do the setting, you can leave it on yellow. And you change it to 800. Let's change the thickness as well. Change thickness as well. So, okay. So you can see it is all applied on my chart. Francis, are we good? You understand how I got it right? Please, can you tell me so I can continue the class? If you are using MT4, it's the same thing. You just look for your indicators and you put your moving averages on it. All right. All right, beautiful. You understand it. So let me hide it so I can actually draw my rectangle square here. Yeah, God bless you too, Francis. All right, so we've actually identified our impulse move. We've drawn a trend line. This is gold. This is gold. You can see it here, XAU USD gold. Then for me to identify my pivot levels, I use my horizontal line, the intersection, and I click it there. So I'm going to just do I'm going to do it for the lower rectangle because there's nothing happening here. So maybe let's say when price breaks this pivot level, then you can actually draw yours. But for us to end this class on time and go back to our charts, so we need to do this first. And I'm picking my trend line. I'm doing the same thing. This is it. And this is it. So I'll go to my 15 minutes. I'll see how price reacted to this. Now, let me reset my chart. Beautiful. Price broke our pivot level. Have you seen it? So it broke it. We're going to wait for this candle to close, and we'll wait for the next 15-minute candle to close. If you actually close above this pivot level, we'll take our buy to the next pivot level. Gold has always been the bullish. I'm expecting it to get to 1800 to go back to that place before it can start dropping. So because of that double bottom on H4, so gold is bullish. Now see what the 800 is doing. It's trying to act as a resistance. Okay, so the opening of this market will determine if we're going to actually continue selling or buying. But you can see market price has been consolidating here. If you can see what's happening here, there's so much consolidation. So this could be a breakout, but we're not going to conclude until the market opens. Now 800 is telling me, oh, we're still going down. 200, what's it saying? You see why price closed? Exactly on the 200 moving average. That was where price closed on Friday. Exactly on the 200 moving average. Then let's see what 50 is saying. Price did what? Crossed here to sell, but it's consolidating. It's telling us that this sell is not going to be valid because of what's happening here. I'm expecting a breakout. So for me, I will wait for this candle to close above, wait for the next candle to close. If the next candle closes above this, then I will look for a buy opportunity on gold. But I'm always being bullish on gold. So if you want to do this, you take your long position calculator. There's no entry here until price does what? Opens, the market opens. But this is what it should look like. This is how price should look like. So if I'm entering from anywhere around this, above my pivot level, this is what I'm waiting for to happen. So if you do this, we expect the market so anything above the pivot level, that's what I'm going to take. But if it's not above the pivot level, no. But I'm bullish on what? Gold. So for gold, I have buy opportunity. Any question? Let's see what Real USD is doing. You can see it's still reacting. So I'm expecting it to go up a bit before it comes down. The same thing here. So it's not always good to chase the trade. You can see what price is doing. So any question before we call it a night? If there any question, type on the chat box. All right, for the absence of the questions, so for the three pairs that we analyzed today, AUD USD, we're selling it. Euro USD, we're selling it. Gold, we're buying it upon the confirmation of the next candle that is going to close, the next 15 minutes candle that is going to close. So thank you very much, everyone, for being part of this class as usual. I'm going to send the pictures of these charts on the platform on our WhatsApp group so we all can take advantage of it. Thank you. God bless you all.